Why does Warren Buffett, one of the world's most successful investors, believe Bitcoin can never be a good investment? In this video, we'll delve into Buffett's intriguing perspective, exploring his famous rat poison squared comment, and why he compares Bitcoin to speculative bubbles like tulips and gold. Stay tuned to discover the fundamental reasons behind Buffett's strong stance against Bitcoin and what this means for the future of cryptocurrency investments. Get ready for a deep dive into the mind of a financial genius. Let's get started. Number 10. Bitcoin, rat poison squared. Warren Buffett famously labeled Bitcoin as rat poison squared, a phrase he used to emphasize his disdain for the cryptocurrency. His comment reflects his view that Bitcoin is an even more dangerous investment than traditional speculative assets. By likening it to rat poison, Buffett underscores his belief that Bitcoin offers no real value or productive use and is a harmful speculative trap. He suggests that investing in Bitcoin is akin to betting on a mirage, with investors ultimately facing significant losses. This extreme characterization highlights Buffett's conviction that Bitcoin's speculative nature makes it a poor choice for serious investors. Number 9. The controversy and social media backlash. Warren Buffett's critical comments on Bitcoin have sparked significant controversy and backlash, particularly on social media. His remarks comparing Bitcoin to rat poison squared drew sharp reactions from cryptocurrency enthusiasts and traders. Many took to Twitter and other platforms to defend Bitcoin, often responding with heated arguments and personal attacks. Some even claimed Buffett's views were outdated, accusing him of not understanding the cryptocurrency revolution. This backlash highlights the deep divide between traditional investment principles and the growing cryptocurrency community. Despite the online uproar, Buffett remained steadfast in his position, emphasizing his belief in productive assets over speculative investments. Number 8. Bitcoin versus productive assets. Buffett's investment philosophy is grounded in the value of productive assets, those that generate tangible returns over time. He explains that when you invest in a farm, a business, or real estate, you gain not only the original asset but also the income it produces. In contrast, Bitcoin does not produce anything. Its value relies solely on the hope that someone else will pay more for it later. This lack of productive capability makes Bitcoin fundamentally different from the assets Buffett typically invests in. For him, the inability to generate consistent returns disqualifies Bitcoin as a sound investment. Number 7. The greater fool theory. Buffett succinctly explains that investing in Bitcoin is essentially betting on the greater fool theory. Investors buy Bitcoin with the expectation that they can sell it at a higher price to someone else, who in turn hopes to sell it for even more. This cycle relies on an ever-growing pool of buyers willing to pay more without any underlying value creation. Unlike productive assets, Bitcoin's value is entirely speculative. Buffett's criticism here is not just about Bitcoin, but about any investment strategy that depends on finding a greater fool to sell to, rather than generating value through productivity and earnings. Number 6. Gold and historical perspective. Warren Buffett often contrasts Bitcoin with gold to highlight its speculative nature. Historically, gold has been viewed as a store of value, but Buffett points out its minimal growth over the centuries. He notes that the value of gold has only marginally increased compared to productive assets, with a compound rate of less than 1%. Gold doesn't produce income or dividends, making it similar to Bitcoin in that regard. This historical perspective underscores Buffett's point that assets lacking inherent productivity or earnings, like gold and Bitcoin, offer limited long-term value. By emphasizing gold's stagnant growth, Buffett reinforces his skepticism about investing in non-productive assets. Number 5. The speculative nature of Bitcoin. Warren Buffett criticizes Bitcoin for its speculative nature, comparing it to historical bubbles like tulip mania and shark's teeth. He argues that Bitcoin, unlike productive assets, offers no real utility or value beyond what investors are willing to pay for it. This speculative characteristic fuels price volatility, driven by hype and market sentiment rather than intrinsic worth. Buffett points out that the rising prices attract more buyers, but this cycle is unsustainable. Investors are often driven by the hope that they can sell their Bitcoin to someone else at a higher price, rather than any fundamental economic value. Number 4. Bitcoin's long-term viability. Buffett's skepticism about Bitcoin's long-term viability stems from its lack of intrinsic value and productive capacity. He argues that Bitcoin doesn't generate earnings or dividends, making it fundamentally different from productive assets like farms or businesses. Instead, Bitcoin's value relies on speculation, with investors hoping to sell it to someone else at a higher price. Buffett compares this to historical speculative bubbles, such as the tulip mania. He emphasizes that without underlying value creation, Bitcoin's future is precarious. This perspective highlights the risk of investing in assets that don't produce tangible returns, contrasting with his preference for investments grounded in real economic activity. Number 3. Banks and cryptocurrency. When asked about portfolio banks making a market in Bitcoin, Buffett emphasized that Berkshire Hathaway doesn't dictate operations to its portfolio banks. However, he remains skeptical about cryptocurrencies. Buffett believes that cryptocurrencies, including Bitcoin, will ultimately face a bad ending. He is so confident in their downfall that he would buy long-term puts on all cryptocurrencies if possible. Despite this, he avoids shorting them, preferring to invest in businesses he understands. His stance underlines his caution against venturing into speculative assets without intrinsic value, reaffirming his belief in traditional, productive investments over the uncertain and volatile nature of cryptocurrencies. Number 2. Bitcoin futures and speculation. Buffett dismisses the idea of trading Bitcoin futures or taking any position on cryptocurrencies. He emphasizes the importance of investing in areas he understands well. Given the speculative and unpredictable nature of Bitcoin, he sees no reason to invest in something so uncertain. Buffett's investment approach is rooted in thorough analysis and a deep understanding of the assets he invests in. He avoids speculative ventures, preferring to focus on investments with clear value and predictable returns. This disciplined approach has been a cornerstone of his success and is a key reason why he steers clear of Bitcoin. Number 1. The psychology of speculation. Buffett highlights the psychological aspect of investing in Bitcoin. The excitement and allure of quick profits can blind investors to the lack of underlying value. The speculative rush draws people in, driven by the fear of missing out on potential gains. This behavior is reminiscent of past speculative bubbles, where irrational exuberance led to significant financial losses. For Buffett, understanding the psychology of speculation is crucial to avoiding investment pitfalls. By focusing on tangible, productive assets, he mitigates the risks associated with speculative investments like Bitcoin, ensuring a more stable and reliable path to wealth creation. Warren Buffett's dismissal of Bitcoin as a viable investment highlights its speculative nature and lack of intrinsic value. While Bitcoin continues to captivate many, Buffett's focus on productive assets and long-term value creation offers a sobering reminder of the importance of sound investment principles. Understanding his perspective can guide investors towards more stable and reliable financial decisions. Thank you for watching. If you found this video insightful, please like, share, and subscribe for our latest content. Share your thoughts on Buffett's views in the comments below. For more investment wisdom and financial insights, stay tuned to our channel. Until next time, keep investing wisely and stay informed. See you in the next video. Goodbye.